Investing in a passive index might seem like a walk in the park, but the truth is it is not that easy. Even though it is the go-to advice from financial experts, many people find it difficult to stick with. It is not about being super smart, it is more about keeping your emotions in check. In this video, we will break down 4 reasons why people have a hard time with passive index investing, and I will also talk about how you can avoid them. My name is Kanak and welcome back to my channel. Your support is what keeps this channel running, and if you find this video helpful, then show your support by liking and subscribing to the channel. The main reason many people struggle with passive index investing is because they believe that they can outsmart the market and make more money by picking individual stocks. However, studies have consistently shown that those who pick stocks or engage in short-term trading generally perform worse than the market in the long run. Even highly qualified and well-paid mutual fund managers often fall short of matching the market over time. So even if you feel confident in reading companies' financials and understanding its business fundamentals, various human biases can lead you to make poor investment decisions. To beat the market, you will need to consistently pick the right stocks at the right time, maintain emotional control to hold on to them, and then know when to sell. While it may sound simple, it is actually a very challenging task, and even many professional money managers struggle with it. Another big reason investors struggle with passive index investing is the constant stream of information thrown at them, whether from the media or their social circles. Just turn on the TV and you will hear predictions of the stock market crashing. This flood of negative news often instills fear, making people feel the need to take actions to avoid losses. As a result, they either never become passive index investor or switch back to active investing. There is a famous quote from Warren Buffett that sums it up. The stock market is a device for transferring money from the impatient to the patient. It is tough to stay patient when faced with a barrage of negative information. The third common mistake many people make when trying to be passive index investor is either stopping or withdrawing their investments in the index fund when the stock market takes a nosedive. When the market goes down, it gets emotionally tough for most people to shake off the fear and keep investing. Some even go a step further and withdraw their investments. It is basically doing the opposite of Warren Buffett's advice, that is, to be greedy when others are fearful and be fearful when others are greedy. Instead of buying low and selling high, most people, because of a lack of emotional control, end up doing the opposite, that is, selling low and buying high. The fourth major reason people struggle with passive index investing is because it seems really boring. Many people associate making money in investing with being active. It might sound counterintuitive, but in the stock market, being too active can actually hurt your portfolio performance. The more you take a long-term and passive approach as an investor, the higher the likelihood of success. I've got another video where I discussed how passive long-term investors can outperform both long-term and short-term stock traders over the long haul. To quote Paul Samuelson, investing is like watching paint dry, but if you're looking for excitement, you might as well go to a casino. So, to be a successful passive index investor, here are 4 things that you need to do. Firstly, do not assume you can time the market or pick individual stocks better than the index. Secondly, embrace a long-term passive mindset as inactivity often pays off in the stock market. Thirdly, ignore stock market noise and avoid getting swayed by the fear-inducing media information. Finally, do not stop or withdraw investments when the market is down. Continue holding and investing in the index. If you find this video helpful, then show your support by liking and subscribing to the channel.